I was hired to come in. I uncovered for Paul Tudor what he was doing at his best. I got to interview all the people around him. I watched films. There were patterns that Paul Tudor was doing when he was at his very best, and he dropped them out. One of those things that I learned from him, he risks for asymmetrical returns. In other words, most investors think you take huge risks if you're going to be a billionaire, huge risks to be really successful financially. The truth of the matter is these great investors do not take those huge risks. The vast majority do not. Asymmetrical risk reward means they try to do the least amount of risk possible with the most upside. He would look for investments where he didn't want to invest unless he believed if he invested $1, he could ultimately make 5 off that dollar, 5 to 1. Now, he knows he's going to be wrong lots of times. And so he knows if I risk $1 and I lose, I can risk another $1, I'm still going to be up 3, you follow? He could be wrong 4 times out of 5 and break even still. So that's the secret. Kyle Bass took $30 million in 2008 and 9 during the worst economic time in history and turned it into $2 billion in 2 years. How the hell do you do that? He never risked more than 6 cents to make $1. If he's wrong, he'd be wrong 15 times and still make money. Well, he wasn't wrong 15 times, which is how he turned 30 million into 2 billion. So those are some of the most important principles if you really want to become wealthy in financial terms.